Okay, let's get into it. Today we're looking at a really fascinating and pretty specialized investment.
That's right. It's a closed-end fund structure.
And what's so special about it is that it's basically the only way for most people to get any kind of direct exposure to some of the biggest private companies in the world.
Yeah, companies that are usually completely walled off, reserved for, huge institutions.
So our goal for you today is to really understand how this fund, Destiny Tech 100, has this kind of competitive edge.
And to look at the performance, which has been pretty jaw-dropping recently.
But also, and this is the most important part, to really grasp the huge risk that's involved. Because this isn't about like quarterly sales or earnings reports.
Yeah.
It's about valuing something you can't really see.
Exactly. It's about the future potential of these giant private tech companies.
So to even start, we have to establish the context, right? The structure of the fund itself.
Yeah, you can't look at this like you'd look at, say, Apple. It's a closed-end fund.
Which means performance is measured differently.
Completely differently. You're looking at two things: the growth of its net asset value, or NAV,
Right.
and the unrealized gains on the companies it holds.
Let's pause on NAV for a second, because that's so critical here. For anyone new to this, what is NAV in this context?
So NAV is basically the total market value of everything the fund owns.
All the private company stakes.
Right, minus any liabilities, and then you divide that by the number of shares. It's the book value per share.
But the key here is the closed-end part.
Yes, you can't just redeem your shares from the fund like a mutual fund.
You have to sell them on the open market.
Exactly, which means the share price can trade way above or way below that actual NAV. And we'll definitely get into that later.
That structure, though, that's what creates its competitive moat.
It is.
It's giving you that exclusive pre-IPO exposure. You just can't replicate this portfolio anywhere else.
And the holdings are the whole story. I mean, as of Q3 2025, you've got 23.3% of the entire portfolio in one company, SpaceX. And when you look at the potential IPO numbers being thrown around, some scenarios for 2026 are valuing it at, what, $1.5 trillion?
A staggering number. That's bigger than almost any public company out there.
That potential valuation is what's fueling this whole thing. It's the entire thesis.
So beyond that potential, how solid is the fund's foundation right now? I mean, you're betting on something very illiquid.
Well, what's so interesting is the balance sheet.
Okay.
It's a fortress. They're operating with zero debt.
Zero debt. That's huge.
It's crucial. When your assets can't be sold quickly, you can't have leverage risk hanging over you.
I also saw that their cash position is at zero, which, sounds aggressive.
It does, but in this case, it just means the capital is fully deployed.
So they're not sitting on the sidelines.
Not at all. They're all in on these private tech plays,
Right.
but it's not a passive strategy.
Right, they're actively managing it.
Very actively. In the first half of 2025, they made $2.1 million in new purchases, but also sold $3.9 million.
So they're trimming and rebalancing, taking profits.
Opportunistically, yes. They're not just buying and holding forever.
Okay, that's a key point. So let's shift to the performance, because some of these numbers are really something else.
The appreciation has been remarkable. Just look at the portfolio fair value.
Yeah.
It saw a 99.5% increase in a single quarter.
From Q2 to Q3 2025.
Right. From about $77 million to over $153 million. That shows a massive markup on the value of those private holdings.
And for an individual investor, you see that in the NAV per share.
Uh-huh.
In Q1 2025, it was $6.31.
And by Q3.
$11.37. That's an 80% jump in just 2 quarters.
So that naturally raises the question, is the stock market actually seeing this? Is it paying attention to this internal growth?
It seems like the answer is a clear yes. If you look at the technicals, the stock is trading above both its 50-day and its 200-day moving averages.
Which is a classic bullish signal. It suggests strong momentum.
Right, it's not just a short-term blip. And this movement has real volume behind it.
Which is what you want to see.
Lately, trading volume has been surging, anywhere from like 29 to over 160% above average.
And that's not just retail traders. That kind of volume spike usually means institutions are moving in. The smart money.
We're also seeing a clear pattern of higher highs and higher lows. And we saw what happened when that dominant catalyst news hit.
A 38% surge in 1 week.
Which connects directly to that institutional conviction you mentioned.
Yeah, you're seeing a cluster of sophisticated funds buying in. Aristides Capital started a new position.
And Invesco increased their stake by almost 85%.
When you see names like Raymond James, UBS, They're all initiating or adding to their positions.
It signals some serious confidence.
A lot of confidence. They're betting on those future drivers.
So let's talk about those catalysts.
Yeah.
Because the whole narrative right now is dominated by one thing.
The SpaceX IPO timeline.
That's what caused that 38% spike.
Absolutely. The reports are pointing to a potential IPO in the first or second quarter of 2026.
And again, that $1.5 trillion valuation is the number that drives everything, if that happens.
If that happens, the fund's stake gets revalued almost overnight. You'd see a massive instantaneous expansion of its NAV.
And SpaceX is the main engine, but there's also OpenAI, sort of, hovering in the background.
A huge secondary catalyst. Now, Sam Altman, their leader, has been a bit lukewarm on going public.
Right. He doesn't seem to want the hassle.
But he's also admitted they might have to, maybe in 2027, just to raise capital.
The AI race needs a ton of money.
A ton of money. An IPO might be the only way to get it.
Okay, so if we're trying to have a balanced view here, we have to talk about the elephant in the room.
We do. The fund's biggest vulnerability.
The valuation premium.
Yes, the valuation premium.
Lay out the numbers for us, because they're pretty hard to wrap your head around at first.
All right. So as of September 30th, 2025, the net asset value per share was calculated at $11.37.
Okay, a little over $11. And the stock was trading at
$30.98.
Wow.
So you do the math. The market is pricing the shares at a 172% premium over the actual book value of what it owns.
Wait, so you're saying if I buy a share today and that IPO story falls apart, I'm instantly down by a massive amount. How is that rational?
It is extremely risky. You've hit on the exact danger.
Yeah.
But the market sees it as manageable. And here's the thinking. That premium is the price you pay for exclusive access.
So it's like a ticket price.
It's a ticket price.
Yeah.
You're not paying for what it's worth today. You're paying for what it could be worth tomorrow. The bet is that the NAV will expand so dramatically that the premium shrinks or even disappears.
So the premium itself isn't the problem. The risk is all about the timeline and the execution.
Precisely. If the IPO gets delayed or if SpaceX goes public at a valuation that disappoints the market.
Say it's not 1.5 trillion, it's 900 billion.
Exactly. Then that premium could collapse instantly. It creates incredible volatility and a huge vulnerability for anyone who doesn't understand what they're paying for.
Understood. It is a high-stakes bet.
Uh,
But the thesis is that the potential for that NAV to expand, plus all that institutional buying,
right.
it sort of offsets the risk of that high premium, especially if you're smart about your entry point.
That's the final take. For investors who want this specific exposure, the upside is just too compelling to ignore. So the idea would be to use pullbacks, maybe get in around those $26 to $29 support levels to position yourself for that catalyst window over the next year.
So what this all really means for you, the learner, is that this fund is a very high conviction, very high risk bet on the future of these private giants.
Yeah, it's a structured gamble on a specific timeline.
And you just have to be prepared for the volatility. This is not a set it and forget it kind of investment.
Not at all. And that brings up one last thought for you to think about. Given the fund itself has no debt and is fully invested, the next big capital raise doesn't have to be an IPO.
Interesting.
Think about it. How much cash do you think SpaceX and OpenAI are going to need in the next 12 months? And how could another huge private funding round affect the fund's valuation before an IPO even happens?
So you're saying there might be other milestones to watch for?
Exactly. What news should you be tracking besides just the official IPO announcement?
That's a great question. This is definitely one to watch very closely as we get closer to that 2026 timeline. We hope this analysis gave you the foundation you need to explore this unique corner of the market.